Hello everyone, welcome to the Consulting Couch. Here we talk all things consulting. And if you're new here, we are doing an industry overview series in which we give short explainer videos of various industries such as automobile, healthcare, airlines, and many more. And today we'll be learning about the asset management industry. So let's first discuss what are the key terms associated with an asset management industry. The first and the most important term is asset under management. It is the total value of all investments managed by the mutual fund across all schemes. The next term is net asset value or NAV. It is the price of each unit of a mutual fund scheme. So typically when a new mutual fund is released in the market, every unit is priced at 110 rupees. And then as per the daily performance of the mutual fund, the price or the NAV keeps changing. Another very important term is asset allocation. This means the basic division of capital between all the asset classes, such as equity and debt, based on the risk and reward attached with each of them. Another very important term, which we all must have heard of and also considered while buying mutual funds, is expense ratio, which is the most important, and it is the cost of a mutual fund which it incurs for managing each unit of their MF. A mutual fund typically deducts these expenses from the NAV before declaring it on a daily basis. Another two important terms are alpha and beta, and they are the key measurements used to evaluate the performance of a fund. Alpha takes a fund portfolio's volatility and compares its risk adjusted performance to a benchmark index, whereas beta measures the portfolio's volatility compared to the entire market. Now that we understand what are the key terms, let's understand what are the key categories of these funds. First category is equity funds. These are basically the ones that invest in equity market. So these funds allow the investors to participate in stock markets. These schemes have the highest return potential in the long run, but they also have the highest risk. They are further divided into three categories. First being sector specific, which pertain to particular sectors such as IT, banking, automobile, and many more. Another type of fund is index funds, which replicate the stock market indices basis the weightage of different stocks. And the third category is tax saving funds, which offer tax benefits to investors. And these types of schemes usually have a 3-year lock in period. The next category of funds is money market funds. These funds invest in short term debt instruments looking to give a reasonable return to the investors over a short period of time. These funds are suitable for investors with a low risk appetite who are looking at parking their surplus funds over the short term. The third category of the fund is debt funds. These invest most of the money in debt or fixed income instruments such as government securities, bonds, debentures, and many more. They are low risk, low return funds. Now that you understand what are the different categories of funds, let's understand what are the various cost drivers for an asset management industry. The main cost driver for AMCs is employee benefit expenses, which are approximately 50% of the expenses that are incurred in an asset management industry. Another major cost driver is the fund manager's hefty salary. Since the fund manager is the key revenue strategizer for the asset management company, the salary and benefits paid to the fund manager are also quite enormous. The third cost driver is fees and commission, which comprises mainly of the commissions that are paid to the distributors on sale of mutual fund schemes and to PMSs and advisory mandates. Other miscellaneous expenses include smaller expenses such as depreciation on computer equipment, right to use of assets, and other administration and operating expenses. Now that we understand the cost drivers, let's have a look at the revenue drivers. The primary revenue driver, as we heard of earlier as well, is the expense ratio, which is nothing but the percentage of assets payable to the fund manager as maintenance fee. The various components of this expense ratio are the management fee or the investment advisory fee, the administrative costs, And lastly, advertising and promotional expenses that are incurred. Another very important key factor is the number of investors that are there in a particular mutual fund scheme. Higher the number of mutual fund subscribers, whether via SIP or lump sum amounts, higher will be the revenue that the AMC or the asset management company earn. Lastly, let's understand what are a few key growth drivers for the asset management industry going forward. So we know that now there's a lot of increased financial literacy, and the awareness about capital markets has also been on the rise lately. The penetration of the stock market in the youth has really increased. And the second growth driver is increased digitization, which is also, playing a big role in introducing a larger pool of investors to the industry, especially through mutual funds, because it's considered to be still a safer way of entering the markets rather than straight away investing in stocks. So now you understand what are the main key two growth drivers for the asset management industry. So that was a brief about what all drives an asset management company and what an asset management company is all about. Hope you learned something new today. Stay tuned for many more such videos. Thank you.